Hello and welcome to Calling Monster Finance. It's September 19th, 2025. Tomorrow markets closed out a pivotal week on a strong note, with major indices posting solid gains. The primary headline driving sentiment was a surge of optimism surrounding U.S. China relations, which added significant momentum to a market already buoyed by the Federal Reserve's recent decision to cut interest rates. However, the rally was not uniform across the board. We saw a clear divergence between large-cap technology stocks and smaller companies, creating a complex picture beneath the surface of the major averages. Coming up, we'll break down the key drivers behind today's session, including the Fed's policy signals and crucial commentary from key political and business figures. We'll also analyze the sectors that led the charge and those that fell behind, before recapping the day's essential closing numbers. The main storyline for Wall Street today was the powerful combination of dovish monetary policy and easing geopolitical tensions. The market continued to digest the Federal Reserve's first interest rate cut in 9 months, a move that signaled a clear pivot toward a more accommodative stance. This provided a bullish foundation for the week. Collisions was built upon today with a significant development on the geopolitical front. A phone call between U.S. President Donald Trump and Chinese President Xi Jinping was described as productive, sparking hopes for a de-escalation in the ongoing trade dispute and a potential resolution for the U.S. operations of TikTok. This confluence of positive news propelled large-cap indices higher. The S&P 500 gained nearly 0.5% to close at 6664.36, while the tech-heavy NASDAQ composite led the way, climbing 0.72% to finish at 22631.48. Both the technology sector was once again a central focus, not only due to the TikTok news, but also because of the continued market reaction to the recently announced strategic alliance between NVIDIA and Intel. This American chip alliance is seen as a move to secure U.S. leadership in the critical semiconductor industry. Despite the headline gains, the market's internal dynamics revealed a more nuanced picture. While the AI-driven technology theme continues to attract significant investment, interest rate-sensitive sectors and small-cap stocks faced headwinds, highlighting a clear divergence in investor sentiment and performance. Let's take a deeper look at the two macroeconomic drivers that shaped today's trading. The first, the Federal Reserve's policy pivot remains a dominant theme. Earlier this week, the central bank cut its benchmark federal funds rate by 25 basis points. In his press conference, Fed Chair Jerome Powell framed this decision as a risk management cut. He cited a desire to preempt potential weakness in the labor market, noting that job gains have slowed. This move came even as the Fed acknowledged that inflation remains somewhat elevated. The market's reaction has been complex. While equity investors welcomed the prospect of looser monetary policy, the bond market appears more cautious. The yield on the benchmark 10-year Treasury note actually rose today, closing at 4.14%. This suggests bond investors remain concerned about persistent inflation and may not be fully convinced that a sustained cycle of rate cuts is guaranteed, especially with the Fed's own projections not seeing a return to its 2% inflation target until 2028. The second and more immediate catalyst for today's rally was the positive development in U.S. China relations. President Trump's announcement of a very productive call with President Xi provided a significant boost to market sentiment. The discussion reportedly advanced a framework for a deal on TikTok's U.S. operations, with Oracle positioned to play a leading role. This news directly fueled a rally in Oracle's stock, which closed up over 4%. More broadly, the optimistic tone of the call has eased geopolitical risk, fueling hopes that a temporary trade truce, set to expire in November, could be extended. This reduction in uncertainty was a key factor behind the broad gains in the S&P 500 and the Dow Jones Industrial Average. Now let's turn to specific commentary from key figures that influenced the market. Both President Donald Trump was the central newsmaker today. His public comments following his call with Chinese President Xi Jinping directly catalyzed the market's upward move. By describing the call as very productive and signaling that the two leaders made progress on many very important issues, He injected a dose of optimism that reduced the geopolitical risk premium priced into equities. His specific mention of a framework for a TikTok deal, which would see its U.S. operations controlled by American investors and companies, provided clarity on a long-standing issue. The market's response was direct, with the Dow Jones Industrial Average gaining 172 points and the S&P 500 adding over 32 points following the news. Meanwhile, commentary from Elon Musk also drew attention, particularly within the technology sector. Musk praised Intel's new CEO, Lip-Bu Tan, in the wake of the major partnership announcement between Intel and NVIDIA. This comment comes as the narrative around Musk's own company, Tesla, continues to shift. Analysts are increasingly focused on its long-term potential as a physical AI company, driven by its ambitious goals for autonomous robotaxis and humanoid robots. Despite some near-term operational issues, this AI-centric vision continues to resonate with investors. Reflecting this sentiment, Tesla's stock outperformed the broader market today, closing higher by 2.21%. While the major indices finished in positive territory, a look at sector performance and different market segments reveals significant divergence. Both prominent split was between large-cap and small-cap stocks. While the S&P 500 rose by 0.49%, the Russell 2000 index, which tracks smaller companies, fell by 0.77%. This indicates that today's rally was concentrated in larger, more established companies, while smaller firms faced profit-taking. Rossi performance also told a story of a bifurcated market. The clear leader was the information technology sector, which climbed 1.19%. This outperformance was driven by continued enthusiasm for the artificial intelligence theme and positive news related to the tech-centric TikTok deal. The communication services sector also performed well, gaining 0.80%. On the other end of the spectrum, the energy sector was the day's biggest laggard, falling 1.28%. This decline was tied to a drop in crude oil prices, with West Texas Intermediate crude falling 1.34%. Interest rate-sensitive sectors also struggled. The real estate sector, for example, declined by 0.46%, likely pressured by the rise in the 10-year Treasury yield, which can make financing costs more expensive. This performance gap underscores how investors are favoring technology-driven growth while showing caution toward other parts of the economy. Now, let's recap the closing numbers for today, September 19th. 6th, the major U.S. indices. The Dow Jones Industrial Average rose 0.37%, closing at 46,315.27. The S&P 500 index gained 0.49% to finish at 6,664.36. The NASDAQ Composite was the leader, up 0.72% to close at 22,631.48. In contrast, the Russell 2000 index fell 0.77%, ending the day at 2,448.77. Collisions. To key macro indicators, the CBOE Volatility Index, often called the market's fear gauge, declined 1.59% to 15.45. The U.S. Dollar Index strengthened, rising 0.31% to 97.65. The yield on the 10-year Treasury note increased by 0.85% to 4.14%. In commodities, crude oil prices fell, with the July contract settling at $62.72 per barrel, a drop of 1.34%. Gold, however, moved higher, with the August contract gaining 1.12% to $3,719.40 per ounce. And in the cryptocurrency market, the price of Bitcoin declined 1.72% to $115,405.11. Now for the 5 most actively traded stocks by turnover. Both one was the SPDR S&P 500 ETF, which gained 0.5%. Second was AppLovin, which surged 4.52%. Third was NVIDIA, posting a modest gain of 0.24%. Fourth was Apple, which climbed 3.20%. And fifth was Tesla, which rose 2.21%. In summary, today's market session was defined by optimism, A dovish Federal Reserve provided the backdrop for a rally that was ignited by positive diplomatic news from a call between the leaders of the U.S. and China. This pushed large-cap indices, particularly in the technology sector, to a strong weekly close. However, the underperformance of small caps and weakness in sectors like energy and real estate highlight that investor confidence is not yet universal. Seat participants will be closely watching for concrete actions to follow today's diplomatic discussions, especially with the upcoming APEC summit and the November expiration of the current tariff truce on the horizon. These developments will be critical in determining the market's direction in the coming weeks. If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments.